glad to be here and glad to be amongst the best minds in the BFSI space. If you look at the speaker's profile, we have them from different verticals and not just banks or insurance companies. And I'm sure that we are going to learn a lot about their strategies on digital and how are they looking at the financial institutions' progress, specifically in the digital front, and how are they building their own strategies and business models. So there are a lot of questions, themes specifically about whether digital will be beneficial or not. But I will do one thing. I will ask all the gentlemen to share their own perspective specifically about how do they see the banks or the whole BFSI companies or the financial institutions connecting with each other digitally. Because what has happened is every bank, every BFSI company has adopted digital. Every company has partnered with some fintech or insurtech companies. And now the question is, what next? How these partnerships will blossom, how this collaboration will take them to a next level, and how this connect will be better. So this is my first question. How are the BFSI companies actually, based on our theme itself, connecting digitally? And I will start with you, Raman sir, your opening remarks or your perspective.
Morning to all of you. Thank you for inviting me here. It's really a forward-looking question. So, as you correctly said, practically every lender in the country has mastered the ability to look at or triangulate the data. So we're talking GST, income tax, MCA, bank account. And all that has happened on the back of probably the best digital infrastructure that the world has seen. And I'm saying that, with very carefully picking those words. And we truly have the ability today to give a loan fully with documentation, e-sign, e-stamp, paperless in half a day. And I'm not talking about consumer loans. I'm talking here about MSME loans and corporate loans. So there is obviously a very big difference in giving a loan to a salaried employee versus giving a loan to an MSME, especially if it is a greenfield project. There's a lot more to be done. So my point is, gathering information is still a challenge, but today, that information comes from several sources which are more easily accessible. So, of course, for a greenfield project in which SIDBI actually does a lot of work, it's still a challenge. But if one were to look at an existing SME customer and he's coming in for some other facility, I think that journey is today incredibly quick. The SMEs themselves are, I think, thirsting for credit. There's been a huge demand, especially, the post-pandemic. In the current financial year, we've seen a lot of movement. But let me go to the point that you've raised. I mean, how are banks going to, or lenders for that matter, going to, sort of look at this data going ahead? And I think that's a great question. We've got, the credit bureaus. Some of the credit bureaus are now giving us information of SMEs have also moved beyond just individual credit profiles. We've also got SARSAI, we've got MCA, we've got the information utility. There are many things that the country has created. It's really about the banking system going into it and exploiting this particular information. I mean, I think all of us recognize that SARSAI is a little difficult, but it's about moving ahead and using better channels. So I'll give you an example. We're working with the IBA on a particular, a lot of the banks give credit to NBFCs, and the NBFCs in turn lend to their final borrowers. The security that banks hold is the receivables of the NBFC. Now, we really do not know what is happening in the life of that loan given to the end borrower. We've created a POC with the help of Infosys on a blockchain where NBFC data can come onto that blockchain. So if the likes of SIDBI, SBI, etc., give money to a particular NBFC, we know exactly what is the list of borrowers that has been given to SIDBI as security and what has been given to SBI. And there is an instant dedupe that happens. Then we refresh that data using the credit bureau information on a periodic monthly basis. So we know exactly what's happening, what is the stressed account, what is not a stressed account. And this sharing of data is something that we need to move ahead. So even something as old as a Cersei platform, we need to be looking at how to sort of refurbish and make Cersei a much more meaningful thing. We also have Krilsi, which is a great database from RBI, but we would like an API from that. So, I think there's a lot that we can do coming together. And for one, the IBA is completely, sort of conversant and is actually leading a lot of digital initiatives. Thank you.
Thank you, Raman sir. That was truly meaningful. In fact, the bullet points that you shared about GST, MCA, and data, I think, is really wonderful. As they say, data is a new oil. Data is already on a fire, and a lot of things are happening that side. Let me take insurance perspective, and Mr. Ora, I would like you to share your perspective.
Right. I think Mr. Raman shared very well on how the banking side and the lending side is moving. Our experience and my experience has been that there is a evolution stage of the whole digital drive, and the banking sector or the lending sector is clearly leading the way. The opportunities of a significantly higher order, given there is a significant amount of customer pull. So the way we've seen this whole digital ecosystem or the interaction system evolve is that the probability of being able to create these connectivities is of a significantly higher order. The moment the pull factor of the customer is on your side, like you said, there is a significant amount of demand on the SME side. There is a credit starvation that has happened over the last few years. And slowly it is sort of easing up. And therefore, if this kind of information is available on multiple platforms, the feasibility of being able to pull it, slice it, dice it to be able to take a decision becomes significantly good. Then comes the next somewhat less of a pull sector, which looks like health products or health insurance. Now that's not as much pull as lending, but there is progression that's happening in that area. Underwriting is moving in a particular way. There are startups that are there who are offering underwriting records that are consent-based, that are available to insurers to be able to underwrite quickly, accurately, and within a short period of time. The benefit to the customer, of course, is that if you are healthier, you get a lower pricing. Why should a customer sort of subsidize an average pricing of a product if he is actually able to access basis his health records? Then comes the motor kind of a segment, which is also quite similar. There are models that have evolved in other countries, not yet evolved out here, where driving behavior, driving practices, etc., get you a lower insurance rate on the motor side. Yet to get there, but that's the future probably of the whole motor segment. And then comes my sector. I'm the life insurer, which is actually push. We started from banking, complete pull, somewhat pull, mandatory, motor, etc. And then comes life insurance, which is a push. There are certain parts of life insurance which are term, etc., somewhat lesser of a push, yet a push category. And then comes savings. Then comes the long-term savings kind of products, which is a 10-year, 15-year, 20-year kind of a product, which is completely push. Those areas are still to get to the complete digital platform-based integration. The benefits on that are yet to arrive. So where we work currently is not so much on the customer acquisition side, that's smaller. Really, it's the operation side, it's the servicing side, it's the instantaneous gratification side, or it's the leveraging of the eKYCs or the e-sign, etc. The fulfillment side is of a higher importance at this point of time. The acquisition process continues to remain manual, and I think it will remain face-to-face for a while. So I just thought I'll take the liberty of describing the push to the pull segmentation in the BFSI industry.
Sure, meaningful thoughts. In fact, that's where the insurance industry is now heading after 2 decades from push to pull. And, good to see that's growing up or that's picking up, specifically with the help of insurtechs and all. We'll come back to on that part. Biswas sir, I will come to you now. You heard the lenders, you heard the insurance. Now I would like you to talk about payments. What kind of connections happening there? How the financial institutions are, heading in that space?
So I want to build on the insurance example because digital experiences fundamentally are built on moments of truth. You offer a product at the time of an experience. So we've seen platform plays in the country. I think the biggest example of a platform play is Amazon, where lending or a finance transaction happens at the time of an e-commerce sale. So really the core use case is strengthened by a financial use case. Unfortunately, in life insurance, I guess the moment of truth is very painful and very finite and binary. Uh, for the bank, Amol, it's been a while since we spoke. This moment of truth has escalated quite rapidly. The moment of truth initially was built on a consumer doing a digital recharge as a payment. And today that has taken shape into a very holistic digital experience where there's no branch at all. And the business model is quite simple. There are a large number of users with very low revenue per user, but yet at scale is able to generate a viable model with revenues and profits. So we have over 50 million monthly users today. We are a phone-based company, in which sense that we process, give or take at the back end, close to annualized around 8 billion transactions, all digital. And finally, you won't find a single shred of paper in the company at all. It's fully digital. We are the largest banking network in the country, 340,000 monthly active banking points. We bank 1 in 5 villages in the country. And of course, on the urban side, we have a very large consumer base coming for one added purpose, which I'll talk about in my next segment. See, the reason why we believed partnerships are important, and I'll build Amol on the theme which you said, which is financial institutions. Our argument is that in partnerships, banks need to think about partnerships with financial and non-financial institutions holistically, because you ultimately want to do a partnership for only two purposes. You want scale or you want to differentiate. It is not necessary that you need to partner with a financial institution for either. So on the scale part, I think the matter is well known and well covered. The access to Airtel gives us ability to have a very low cost of customer acquisition, etc., etc. But I'll talk about differentiation. We have a very unique third layer authentication product, which urban customers come to us for. 54% of tier 1 and above residents in the country today are very scared that their account is going to be compromised on digital frauds, and therefore they are unwilling to expose their main bank account to any digital transaction. And that's why they come to Airtel Payments Bank, which of course by design is designed to be a 2 lakh rupee account. So the risk is finite in that sense. But this product, which we have partnered, in fact, the world first partnership of a bank and a telecom company, is unique in the sense that it uses the SIM of the person's phone to serve an additional authentication message, which the consumer has to accept or decline. Today, I'm just quite happy to say that we have over 1 million daily active users, and we process, give or take, between 250,000 transactions every day. That's the second part. The third part is, Amol, you asked about the view. Our view is that India has gone through two very rapid shifts in the last 6 years. One shift, which is optically obvious, is the jam shift. But the second shift, which is underway today, is the digitization shift, which is BBPS, NPCI, UPI. And the third shift, which is really about to undergo, which we haven't seen yet, but is going to be very dramatic, is the data shift, where the consumer is going to be in charge of their data, but account aggregator, open credit network, and ONDC together will fundamentally change, completing with the first point, change the moments of truth and therefore the digital experiences. And we are bang and sweet in the center of it.
Okay. Again, meaningful thoughts, and I think that was the whole purpose when the RBI gave license to the payments bank, right? Because they really wanted an innovation to happen, and that's why the SFBs and payment bank came into the picture. Meaningful thoughts there, Biswas sir. Let me come back to you. Let me come to you, Murli sir. And I think your view again matters here, not only because of you are a bank, but how the small, or again, small is only market value, but and in today's world, what you can say, every bank is a big bank because of the digital revolution. But your views matters to us only because of you're also a traditional bank and catering to a different audience altogether. So how are you scaling up and connecting with other financial institutions?
Yeah. Good morning. Thanks for the opportunity. Let me start by saying that I think embracing digital, I think is more than anything, it's a necessity today. Primarily because the customer segment who you are servicing, if you look at the demographic mix of customers, I think the biggest chunk would be people in the age group of, let's say, 25 to 40, who are at various stages of life, and therefore their need for availing financial services clearly keeps varying as they move up in life. So therefore, and they are quite comfortable in embracing change. Thanks to COVID, I think last 2 years we have seen by force, I think people have started using mobiles and internet banking, etc. And they've adapted to it much faster than probably what you would have ever imagined. So I think it's a very seamless evolution from there to really look at every offering from a BFSI sector or a financial service sector to offer it digitally, so that this biggest chunk of population, which is actually the consumers of financial services, are quite comfortable in doing such transactions in their own place of convenience. So if you had to really look at a bank, a typical bank, the point which you made, today I think technology is a big leveler, and this is something which I very strongly believe in it, because today with technology there is no differentiation between a large bank or a small bank or a medium-sized bank, because technology is technology and you can make it available to the consumers. And if he feels that there is value addition which is getting, and if it's going to get in convenience, it doesn't really matter who offers the product, because while the product innovation, etc., is completely up to individuals' human capability, it has nothing to do with the size of the organization. Therefore, technology, in my view, is a great leveler, and therefore, we believe in South Indian Bank, for example, we have been investing in technology for the last 5 to 6 years continuously, and I'm happy to say that we have won many, many technology awards by competing with not only peer banks, even with large banks. Therefore, it doesn't really matter what your size is. Then going to the next step of where actually digital embracement is actually really giving a big value addition. If you have to really look at conventional banking, we are in the space of consumer lending, we are in the space of SME lending, we are in the space of corporate lending, we are in the space of supply chain financing or dealer financing, those kind of areas, apart from, of course, payment area. So if you have to really look at the adoption of digital, I think is far more in the consumer side and to a reasonably large extent in the SME side. It has happened in 3-4 big areas. One is in the sourcing side, where I think thanks to many of the fintechs who have got the agility to come with innovation where customer convenience can be brought in, customer acquisition can be made seamlessly. And when a bank partners with them, the ability to really lay their hands on huge customer base becomes that much easier. And also, it can be easily, seamlessly integrated into the bank's systems. So in consumer lending, if you had to look at credit card or a personal loan or an auto loan or a home loan, today I think the entire fulfillment from sourcing to underwriting to onboarding to servicing to collection, I think substantial changes have happened in the area of doing it digitally. And it actually made a lot of sense for banks also not really going for a brick and mortar office everywhere. Therefore, expansion of increasing your services becomes that much easier if you partner with the right partner. Then if you look at the area of credit underwriting, the first part is sourcing, the second one is credit underwriting. Today, thanks to Bureau, thanks to the network available in the ecosystem today, you are having access to data, not only conventional data, but even non-conventional data, which you can factor for your underwriting. And the credit models, thanks to development in analytics, today you can use AI, ML, etc. to come out with the credit models, which can factor many, many things apart from the conventional credit underwriting, which we were doing maybe even 10, 15 years back, where Of course, the fundamentals haven't changed. Today also you look at intention of the customer to pay, ability of the customer to pay, liquidity of the customer to really service his facility. That's core to any credit underwriting. But then the way you assess this has been enabled so much more through integration with data sources available. Today you can partner with the bureau who can, using the bureau data, one can calculate imputed income, and using imputed income model, you can use it analytics to figure out who are the right kind of customers who we can target. So I think substantial changes have happened in the area of credit underwriting. Even a complex business like SME, where it's not just a conventional template credit underwriting, but a touch and feel underwriting. So much has happened in the area of building credit models today, where you can actually statistically validate the kind of qualitative questions which you want to ask an entrepreneur, and from his answers you can correlate to the riskiness of the customer. And we have been using in our South Indian Bank, we have been using such models for doing quality underwriting, and I'm happy to share that the substantial portfolio which we've added over the last 2 years using these models have given negligible delinquencies. That goes to prove that these models are, if used well, can be extremely useful in building a very high quality and a very high quality earning portfolio. And then last area in digital traction which has happened substantially is in the area of customer service. And today, the customers more than ever are looking forward to almost getting everything in his own place of convenience, in our own place of convenience. Therefore, I think huge changes have happened in RPA, in many of those areas where you can actually use data analytics and you can use robots to sort of streamline the regular, mundane, regular kind of queries, and anything which requires a complex handling of customer query can be then focused and it can be resolved by putting a alternate channel. I think also in terms of convenience to the customer, I think many of the our own websites, for example, they made it operational in 9 different languages. Probably one of the very few banks in the country which has that kind of system in their internet banking. So today, customer convenience has really been taken to a completely different level. Today, customer can actually fix the limits of his own transaction limits. He can put a e-locker to enable that his accounts are not compromised and there is no fraud which can happen, which can penetrate into his system. Thanks to development in the cyber security area, I think huge development is happening in those areas where technology can be effectively used, and fintechs which are working on those areas are today finding a great partner in BFSI sector. So I would say that in all these areas, whether it's sourcing or underwriting or customer servicing or any of these areas, I think we are seeing dramatically big changes happening over the last few years, and I think we are in the best of our times to really make use of this for offering better customer proposition. At the end of the day, what customer looks for is his value addition to his business, and or if he's a consumer, what is the value addition to him. I think all these changes, if it's going to really help the manufacturer of these services to offer it at a customer convenience at a very affordable price, I'm sure the adoption of this will be far more.
Sure.
That's where I probably would.
Yes. Obviously, we'll get some chance and try to come back on later part also. Meaningful thoughts. I am also having Sachin Bhatia with us. He's the CGO of Exotel. I'm happy that you could rescue from the traffic and came here. So you come from a different background than the institutions here, and I'm sure most of the institutions must be partnering with you for a different level of partnerships. Experience is one theme that I can learn from all the gentlemen here, that the experience which they provide want to give to the customers. So how do you see the demand of financial institutions towards experience or the customer acquisitions, and what are your learnings? What are actually the financial institutions doing in that front, and what are the challenges they are facing?
Sure, Amol. Thanks. And apologies to the panel and everyone for being late. I don't think the Google algorithm is able to predict the traffic in Mumbai as well as it does in other places. So I represent a company called Exotel, and we are a customer engagement platform. And today, 93% of the unicorns in India, we started our journey with internet commerce companies, right? So Ola, Flipkart, Uber, Amazon, those kind of companies. And we were seeing how those companies were looking at experience journeys, whether it's acquisition journeys, service journeys, and collection journeys. But over the last 5-6 years, 8 years, we have seen extreme keen interest from the BFSI space. And that has changed very rapidly. So it used to be one piecemeal solution for one interaction. So how do we automate collections? How do we automate a sales process? How do we introduce chat as a service channel? That's how we started seeing the BFSI space adopting the newer technologies in the engagement space. But more recently, we have started seeing something very interesting. Let all of us wear a consumer hat for a while, right? All of us in the last 24 hours would have booked a cab, ordered online food, ordered something online from Amazon on Flipkart, right? Show of hands in last 24 hours, right? Typically, it's about 70, 80%. Now, just go through that whole journey of you discovering the product to the product being delivered. There were multiple touch points. You were interacting with an app. Maybe you had some notification. Maybe you talked to the delivery guy. Maybe there was a chat exchange that happened. Earlier, we used to look all of them as separate interactions. But today, these are looked at as one journey and different touch points. And people are experimenting with those journeys very quickly. We have started seeing that happening in banks. So banks are no longer looking at, can you give me a chat channel? Can you now automate my outbound messaging? The stuff that is coming to us is, can we do the document collection automated across channels as one process? Which is very different from, I want to experiment with this channel versus I want to mix this channel into the journey and look at the journey as a whole. So that's the first observation. And thanks to the leadership, I think banks are behaving a lot like these fast, agile consumer companies. They are obviously extremely heavily regulated. So there are concerns around, they usually are not the first ones to be able to experiment because a model has to be proven. But I'll give you another disruption that is happening where banks have started adopting. We have partnered with Meta, which is WhatsApp. And WhatsApp has this vision that today, consumers have two sort of windows into a business digitally. The first is the mobile app, and the second is the browser. So those are the two ways in which you can enter into the digital journey. WhatsApp imagines, or their vision is to become the third channel. Today, we look at WhatsApp as a messaging medium, right? However, all of us are spending, I'm assuming this age group would spend about 30, 40 times you're checking WhatsApp in a day, at least. The next generation is doing it even more. And usually it's the first thing you are doing in the morning and last thing that you do before sleeping. So the imagination is that discovery of the businesses, discovery of product, payments, and delivery of the product, you will not have to leave the WhatsApp window. Now, the thought is scary, but it's a monopolistic market, right? No other channel has an engagement like WhatsApp. And we have started seeing banks adopting that really, really well. So instead of, if you're sending an SMS for compliance reasons, I can understand. We don't read SMS anymore. But if you're sending a notification of, let's say, a collections reminder on WhatsApp, the engagement is through the roof. So those are some of the areas which I have observed in the last 2, 3, 4 years, where banks are actually taking a leap, looking at the whole journey and adopting mediums like WhatsApp, not just as a notification, but as a journey entry mechanism.
Sure. Noted your point, Sachin. In fact, we also use WhatsApp aggressively to send our newsletter in the morning, not just through the website. I think meaningful thoughts from all the gentlemen, and we get some perspective about how they are looking at the whole financial institutions collaborations. So Raman sir, I will come back to you again, and you can give a very different perspective here, because in your earlier avatar you were a regulator. Now you are working with SMEs and MSMEs very closely, which is actually the backbone of the economy, and every lender wants to grab that. So I'm sure you must be partnering with a lot of fintechs, tech companies. What are your learnings? How these partnerships will blossom going ahead? Because when we see that even Swiggy and Zomato is partnering with banks, the partnership model will blossom going ahead. So what are your learnings? What are your suggestions to make these partnerships blossom, make this business model viable? Because everything is going to be interconnected going ahead. That's what we learn.
Yeah, so thanks for taking me back 10 years. But yes, I just want to, on a lighter note, mention and given what you had said about the insurance. So 10 years ago at SEBI, we thought we were the, cat's whiskers when it came to technology because we had, a surveillance system and we had, a great data lake or data warehouse. Information from the exchanges and depositories would come overnight. And, it was truly we used to look down upon the banking system. And today, I think the banking system has overtaken, every other sector. And I wouldn't be surprised that going forward tomorrow, the insurance sector would also end up utilizing. It's about contract management. At the end of it, the base of a lot of what we do in financial services is creating a contract. So every transaction where we give a loan or we give a insurance policy or there is a transfer of stock from person A to B, it is a contract. And that contract management has become entirely digitized. So, to the extent that given the payment system we have today and the, billions of transactions that are happening on an NPCI system, in fact, I would say the biggest vulnerability for all of us is, the NPCI system today. It's just, we should have 3 backups to the system, which I'm sure Dilip is doing. But the point is, in the market, you can actually do risk management at the customer level, at the order level. So we do not need to have a situation where anybody has a complaint against a broker for non-payment. So every order that I put, if it matches you, so I'm a buy side, you're a sell side, it matches, the next minute we can have a transaction which I pass my shares to you, you give me money, because it's all available on a digital flow. So, we have zero risk management in the capital markets because everything is getting, there's what is typically known as delivery versus payment happening on a gross basis right there and then. So we have today the account aggregator coming in, and I'm saying, especially the account aggregator is going to cause all digital contracts or dematted contracts, be it in any financial sector, it will get picked up when the person who owns those contracts wants that information and to give it to some other financial service provider for whatever reason. It can even be for, we're all asked to give, a 6-month bank statement and, asset statement for getting a visa. I mean, it can be used for any purpose. So the account aggregator going forward is at the heart of data empowerment. In fact, the philosophy behind an account aggregator is it's my data and therefore I own it. The minute that moves on the e-commerce side, I'm sure we'll see a far more, sort of data empowerment happening at the hands of the customers. So, the future is quite amazing. And I thought I, learned a lot from what Sachin just mentioned, that, the need for banks to sort of connect with fintechs comes from the fact that there is safety for a financial services provider to go into digital because processes are taken care of. There is no discretion. Yet credit appraisal may certainly require somebody to come in and look at certain ratios and then say yes or no. Right. But process-wise, we can actually save a lot of trouble for people in the financial services sector because it all flows in predetermined ways. And therefore, there can be no mistakes. And if there is a mistake, then that sort of, somebody else's problem, not me as the person giving a loan. So, there's a lot that is happening on the fintech side. I think 5 years ago, Uday Kotak had said, in 10 years' time, we probably will not have a bank branch. Yes. I don't know whether that is, going to come true or not, but we're headed in that direction. Yes. So, the ability to provide services sitting right here without an office, but on secured systems in which everybody is, logging in. I think it's quite, sort of melting pot, and I'm sure lots of good ideas are going to come out with all of us sitting in this room.
Certainly, and I think the world is heading towards digital banks. N26, Europe's largest bank, is absolutely a digital bank. Uh, Ashish sir, let me come back to you. When it comes to lending side, the partnerships have reached to a different level because there are youngsters, millennials who are not just borrowing for marriage, but they're also borrowing to buy a dress for a marriage, right? And and those are the small loans. But I'm sure that's not the case with the insurance. And I'm sure you will have a tough time selling your policies, moving from push to pull. So are these partnerships really helping you apart from bank insurance model? Are you doing that? And I know, no matter how much time you take out, it's always limited. So please, if you could finish your answers and everyone in 2 minutes, that would be really great so that we could cover more.
Okay, let me give you an example of what works. And it doesn't work as much as the lending side. So all our sellers carry apps. We are all digital-based sellers. There is no paper. 99% of our applications are paperless. There is still that 1% where paper exists. Now, one of the applications we have is when a seller is sitting in front of a customer, he's able to quickly use a partnership to be able to pull data, to be able to create a very compulsive argument for the customer. For example, a seller is able to sit in Junagadh and say, "Dear sir, in your state, in your city, in your town, over the last 12 months, 35,000 death claims have been paid. And this is possible for us to do, and we've been doing it for the last 3 years now. It is possible to use partnerships and integrations to be able to create that very compulsive dialogue to say, oh, you need to consider the life insurance prospect very seriously. Otherwise, bulk of the customers we meet believe कि मौत पड़ोसी के घर में आएगी, मेरे घर में नहीं आएगी. I am a believer in God, nothing's gonna happen. Now, here is where a partnership helps. Here's how you pull data to be able to make that compulsive argument to say, this is not true. Your city, your PIN code has got this kind of a death claim ratio, especially in COVID times. Now, in COVID times, some of these numbers just jumped. So we were able to connect and say, 3 years ago, total number of death claims was 12,000 in your city. Now it is 25,000. How do you think of this? So the way life insurance industry uses some of these partnerships is a little different. It is more enablement. End of the day, bulk of the sale is face-to-face. But we use these partnerships to be able to create these compulsive dialogues so that it becomes an enabler to the seller. Let me stop with my 2 minutes.
I think the example was really good, meaningful one. Biswas sir, I would like you to tell us, because you have been already partnering with a lot of people, how the whole structure will go ahead. Because the payment bank, your bank has already partnered with IFCO Toki, if I'm not wrong, many other players also. And if you could also highlight the challenges in terms of these partnerships, because there are regulatory hurdles as well.
So, our thought process is quite simple. If you go to Netflix today, 18% of the content on Netflix is manufactured content by Netflix. The payment bank model is fundamentally a distribution license, not necessarily a manufacturing one. And one doesn't necessarily have companies saying, we are the Netflix of banking. Consumer choosing what's best for him based on a wonderful digital experience. I think that's a vision statement. I really like Sachin the way you articulated WhatsApp vision statement. I'm not saying that's a vision statement for our company, but it is definitely a step which BFSI companies will start taking. And the really bold call there will be a bank saying, I am not good at manufacturing this product. I'm happy to partner with somebody else because their product is better, but my customer experience is better, single sourced, unified. And that's where the core of the problem will lie, because one needs to be extremely thoughtful. And that's almost like a daily conversation internally within us as a company. One needs to be very thoughtful about where does the data lie, who owns the customer, and if there is a transaction getting completed at certain stages, is every stage owner authorized to finish his or her leg of the transaction? These three pieces, as long as we can very rightly said, ring fence through a contract, monitor with oversight, and move perhaps not at the speed of an elephant, but the speed of a cheetah, definitely not a rabbit. I think the BFSI sector is in for very, very exciting times ahead.
Very important comments, Biswas sir. Murli sir, my question is a little different. When you connect with other financial institutions, I mean, as a bank, you must have partnerships with insurance companies. You must be a corporate agent for them. Uh, and must be an interesting business model for you because ultimately banks earn commission out of it. But now when you're connecting with other financial institutions, what is that the first thought comes to your mind? The business value or the second, increasing your customer base and customer experience?
Yeah, good question. I think I would say that it's actually a combination of both of them because when you're looking at a fintech partner or a technology partner, the reason as to why you want to partner with them obviously is a critical question to answer. Whether the value addition which the partner is going to bring in is something where you don't want to invest your time and effort and money, and therefore you would want to partner with him in order to leapfrog that development, or is it for bringing in better security, uh, or is it for bringing better convenience, or is it for reaching out to more and more customers, or is it for the agility with which a fintech partner can probably seamlessly adapt the changes which are happening, which probably for a large institution it might be a difficult thing to do. I mean, it could be for a variety of reasons, but I think the first thing which should come to your mind when you are partnering with a fintech or any other technology partner is to see whether there is an alignment of value. Because what is very important here is that whatever core things which you carry as value for your institution, that should clearly be reciprocated or there should be an alignment of that, right? I can give you a simple example. We were looking at, for example, co-lending is a big thing which is happening now in the BFSI space, where we partner with NBFCs for getting into co-lending arrangement. One of the things which we look at when we try to partner with anybody is what is their risk appetite? What is their credit underwriting model? What are the, how is their experience of the portfolio which they've created in the past? How are they acquiring customers? What kind of target segment are they doing? Are they in the same segment which you are doing, or are they catering to a different set of target segments? So sometimes the objective could be to go and partner with somebody that segment which probably you may not want to start on your own. For example, some of the co-lending which might happen with, for example, MFIs could be in that area, or it could be a lower end of PL. Probably you don't want to be there. You want to be in prime and super prime, but you would want to probably deal with somebody who can afford to probably target us subprime, not necessarily subprime. I'm saying below prime, a kind of customer base. But today, thanks to bureau, etc., probably you will be in a better position to underwrite such customers much better than what we are having in the past. So I think at the end of the day, you need to see whether the partner along with you is going to really create a very strong value proposition for the customer segment which you are servicing, and is it really meaningful to create surplus so that the partner and the BFSI principal has everything to gain, because at the end of the day, partnership has to result in win-win, and the objective of this commercial enterprise is very similar, that you need to make money at the end of the day, and while really looking at customer convenience and customer proposition. So I think some of these becomes a guiding factor for you to really pick and choose from the variety of opportunities you get to see in the market, to really go and talk to, engage with people who are probably similar to you in terms of your wavelength, in terms of your value proposition, in terms of the segments, the gap in segments which you want to address, or probably the customer convenience which you want to bring in. I mean, it could be a variety of these things which probably could be driving your motivation to go and partner with people.
Right. So, Sachin, quickly last, Murli sir mentioned about value proposition and business value. Are the financial institutions specifically really creating a business value by connecting with all other, partners, or it's just a customer experience, or just one of the, what you can say, feather in the crown?
So I was listening to banks and financial services being partners. I'm going to focus on that. There are some thoughts that I want to share, and because I'm an outsider, I've been listening. And I'll be a little blunt. I don't think banks are looking at partnerships as partnerships today. First, I think banks really want to own the customers. Right? That's the perception that I have. And partners are looked at as distribution models for unbanked, and where I can't reach, I should reach. I don't think that's the right way to look at long term. And I will draw parallels. I'm reading a book called Thinking Fast and Thinking Slow by Dale Kahneman, and he says human mind thinks in terms of analogies. So think of a communication platform as a service, somebody like us or a Twilio. Let's say I give you two APIs. There is an API to get a number and API to make a call. Uber uses that API to connect a driver and a customer without sharing each other's numbers. A telecalling company keeps changing the number so that the person picks up the call. A collections company will use a mobile-based DID to call out, and I could not imagine all these use cases. Similarly, I think a bank will have to think that my job is to purely expose the backend API, and my customers are those fintech companies who are the people who are actually imagining that who would be the customer and what would be the use case. We are not there yet. We still believe that it's one step and we will just use this segment and get this. I think it is up for disruption. There are banks that are trying to do it. I've heard from Yes Bank, I've heard from Airtel Payments Bank, who purely want to be the platform. And you say, I will just expose all these services and somebody will disrupt, which I can't imagine today. That's the first thing. The second thing is, today we think of it as exposing APIs, exposing transactions, and having a security framework around the regulatory part. That's what banks are providing. I think one more thing we need to have, it will require an exposure for the partnership to happen is, how do you enable the fintech to completely own the customer experience? Right? Because your journey points require from fintech to bank to customer. Now, today, if the customer's experience is broken, the customer is stuck with the fintech. Fintech doesn't have an answer from the bank, and that's where it breaks, because it's a contract. I don't think it has to be just a contract. It has to be, how do you enable the fintech to be the front-end partner and resolve it? I mean, those are two thoughts. I know they are orthogonal, but we were talking about visions. I think somebody will come, will execute this, and will be able to take it forward. Those are my thoughts.
No, sure, noted your points, and that's what we need, a diversity in views as well, right? I think it's really meaningful. So I'm sure, I wish I could have more time, but it's already 15 minutes. The watch is ticking. I'm getting some messages already for the next session. But thank you so much, Sachin, Biswas sir, Murli sir, Raman sir, and Mr. Ora for sharing remarkable insights here. I hope audience also enjoyed it and they were really meaningful to them also. But thank you so much for sharing your perspective here on this ETBFSI CX Conclave. Thank you so much.